Hello all! Welcome to the California Update Extravaganza. I'm Sean from Addendum Tax, and this is a continuation of our discussion of updates for 2024. As I mentioned in the federal version of our video, if you're just watching this on YouTube and not part of the Aardvark Tax course, you're not getting credit for having watched it. So head on over to www.aardvarktax.com and order our 20-hour federal and California tax course today, so you get credit with both the IRS and CTEC for having watched this video. There aren't a huge number of changes in California tax law this year, but there are a few. So let's start with California's conformance to federal tax law. In general, California conforms to federal tax law as it was written on January 1st, 2015. Anything that Congress has put in place after that either needed to have a special California law written to address it, or it just doesn't conform. As an example, the educator expense deduction that was put permanently into place on federal law after 2015 it happened after 2015, so California does not conform with the federal stance, and taxpayers must use Schedule 540CA to add that money back into their income before calculating the amount of tax that they owe. So with that in mind, let's take a look at some of the new and newish changes in California tax law. First off, taxpayers in San Diego County have until June 17th, 2024 to file their tax returns and pay the amount due. This is due to the flooding that occurred earlier in the year. Because of the Federal Veterans Auto and Education Improvement Act of 2022, a service member and the spouse of service members can now use the resident state of either the service member, the resident state of the spouse, or the duty station of the service member for their state taxes. What this means is that service members and their spouses can now choose the state tax system that is most beneficial to them, and maybe even more importantly, file their state taxes separately using different domiciles if that is most advantageous to them. As California has a lot of military bases in it, this might save some of your clients a lot of money. On another topic, California has certainly had its share of catastrophes in the last few years. Whether it's wildfires or tropical storms, some parts of California have been hammered by disaster. The ability of the governor to provide relief for losses associated with those disasters was supposed to end, but now has been extended to 2029. That means that losses accrued in areas that have been mandated as disasters in California will continue to get preferred tax treatment up until the end of tax year 2028. Anyone's child who uses funds from the California Hope, Opportunity, Perseverance, and Empowerment Trust account, also known as the Hope Trust for Children, will be eligible to exclude that amount from gross income for California tax purposes. That includes all of the interest or earnings that the money makes in the account before the withdrawal takes place. The HOPE program is designed to help out kids in the foster care program or kids who lost parents due to COVID. The feds allow those with student debt forgiveness to not include that debt in income. California, on the other hand, does make you do that, but introduced a law starting in 2022 that allows taxpayers to exclude from gross income the amount of discharged unpaid fees owed by a student to a community college. Keep in mind that California does not conform with the federal stance, as I just mentioned. So the discharge of student debt, the taxpayers must include that amount in California gross income during their tax calculations. While there have been bills in California that would address this, none have passed as of the making of this video. Okay, so that's the bulk of the personal tax items that you should be aware of. Let's talk about a few business things. From a business perspective, please be aware that there are a few new credits that might affect your clients. They include the Low Income Housing Credit, the California Micro Business COVID-19 Relief Grant, the new Employment Credit, and a couple of cannabis industry credits. And there are finally a couple of filming credits for the movie industry that have been introduced or expanded this year. You can find out more details on these credits in our written updated materials in our courses. Okay, so that's it for this year. I hope you're enjoying the end of tax season, and we'll see you in November or December for our end of year video. Have a great rest of your summer.